Hello, friends. The Social Security Administration changed three rules in 2026 that directly affect millions of Americans right now. Most people who are impacted by these changes have absolutely no idea they happened. And that is not an accident or an oversight on their part. The SSA does not send personal notifications when a policy shifts, when a threshold changes, or when an option that used to exist quietly disappears. They update the rule, publish it somewhere most people will never look, and expect you to already know. That gap between what changed and what people actually know is exactly how people end up losing money they were fully entitled to keep, missing deadlines that cannot be reopened, and making decisions based on rules that no longer apply. Today I am walking through all three changes, what each one means in real dollar terms, and the specific steps you need to take right now before any of these cost you something you cannot get back. Before we get into it, subscribe to this channel and turn on notifications. I cover changes like these specifically because the SSA does not translate them into plain English for you. What I do here is take those policy updates, break down exactly what they mean for your specific situation, and get that information to you before the deadlines pass. The people who are subscribed here find out in time to act. The ones who are not subscribed tend to find out after the wrong decision is already permanent and the money is already gone. Hit subscribe and let's get into it. Change number 1 involves the earnings test limit for people who are collecting Social Security before reaching their full retirement age. In 2026, that limit increased to $23,400 per year, up from $22,320 in 2025. That increase sounds modest, but the consequences of crossing that line are significant enough that everyone in this situation needs to know exactly where the threshold sits. Here is how it works. If you are collecting Social Security before your full retirement age and you earn more than $23,400 in a calendar year, the SSA withholds $1 for every $2 you earn above that limit. For someone earning $35,000 a year while collecting early, that is roughly $5,800 withheld from their Social Security payments. For someone earning $45,000, that number climbs to over $10,000 withheld in a single year. The money is not permanently lost. It gets credited back to your record and reflected in a higher monthly benefit once you reach full retirement age. But in the meantime, your check shrinks without warning or clear explanation, and a significant number of people in this situation assume something went wrong with their direct deposit or their account. They call the 800 number confused, and only then find out a rule they did not know about was already working against them. The updated threshold is good news for people who are still working and collecting early. You can now earn about $1,100 more per year before the withholding kicks in at all. If you have not recalculated what you are allowed to earn in 2026, do that now before the SSA does that math for you without any advance notice. Change number 2 affects Medicare, Part B premiums, and the income thresholds that determine exactly how much you pay each month. The standard Part B premium in 2026 is $185 per month, deducted directly and automatically from your Social Security check. For most people, that is the number. But if your income from 2 years ago, meaning your 2024 tax return, was above $106,000 as a single filer or above $212,000 as a married couple filing jointly, you are not paying the standard rate. You are paying what is called an IRMAA surcharge, and that surcharge adds anywhere from $74 to over $400 per month on top of the $185 base premium, every single month, automatically deducted from your check before it ever reaches your account. The income thresholds for these surcharges were adjusted in 2026, which means the brackets shifted and the numbers changed for a meaningful number of people. Some people who were paying a surcharge in 2025 may no longer owe one this year. Some who were not paying one last year now are. The problem is that the Medicare premium notice explaining this change arrives without much context or explanation, and a lot of people simply accept the deduction without understanding they may have grounds to challenge it. Check your current Medicare premium amount. If you are paying more than $185 per month for Part B, compare your premium against the updated 2026 IRMAA income brackets at ssa.gov and confirm which tier you fall into. And here is the part most people never act on. If your income dropped significantly since that 2024 tax return due to retirement, loss of a spouse, a reduction in work hours, or any one-time income event like a property sale or a Roth conversion that temporarily inflated your earnings, you can appeal the surcharge. The form is called SSA 44. It exists specifically for people whose financial picture looks materially different today than it did on that 2-year-old return. File it, document your current income situation, and the surcharge gets reduced or eliminated. People are getting $200, $300, even $400 per month back by doing this one thing. Download SSA 44 directly at ssa.gov or pick it up at any Social Security office. Change number 3 is the one almost nobody has heard about, and for many people, it will be the most disruptive of the 3 when they actually need it. As of March 31st, 2025, you can no longer change your Social Security direct deposit banking information over the phone. That option is completely and permanently gone. The SSA removed the phone channel for banking changes because 40% of all direct deposit fraud cases where scammers redirect your benefit payments to an account they control, began with a phone call impersonating the account holder. Roughly 70,000 fraudulent direct deposit change requests were being flagged as suspicious through that phone channel every single year. The agency concluded the risk was too significant to keep the option open, and they closed it. What this means practically is that if you ever need to update the bank account where your Social Security is deposited, for any reason at all, your bank closed your account, your card expired, and the account number changed, you switched banks, anything, you now have exactly 2 options. You can do it online through your My Social Security account at ssa.gov, which requires full identity verification through that account. Or you can go in person to your nearest Social Security field office and verify your identity directly. That is it. There is no third option, and there is no exception. And here is what blindsides people completely. The SSA made this change with almost no public-facing announcement. The notice appeared in the Federal Register, which is not where most Americans get their news. That means a very large number of Social Security recipients across the country still believe they can call the 800 number to fix a banking issue the way they always have. They cannot. And when they find that out, it is usually at the exact moment when their payment has already been rejected and they are trying to figure out why the money is not there. If your banking information on file with the SSA becomes invalid and you do not update it through one of those 2 methods, your payment does not get delayed. It gets rejected entirely. And getting that rejected payment rerouted and reissued back to you can take several weeks. For anyone living on a fixed income where that monthly check covers rent, utilities, medication, or groceries, several weeks without that payment is not an inconvenience. It is a genuine financial crisis. The protection is straightforward. If you do not already have a My Social Security account set up at ssa.gov, set one up today while there is no pressure, no missing payment, and no emergency forcing your hand. The identity verification process takes about 15 minutes under normal circumstances. Having that account already active and working is the difference between solving a banking problem in one afternoon and spending weeks trying to get a payment reinstated through the only remaining options available to you. Here is the full summary. The earnings test limit for early claimants who are still working increased to $23,400 in 2026, giving you a little more room before withholding begins. The Medicare Part B premium is now $185 per month, and the IRMAA surcharge thresholds shifted, which may change what you owe. And if your income dropped due to any life-changing event, Form SSA 44 is how you appeal it. And the phone option for updating your Social Security direct deposit information is gone permanently. Online at ssa.gov or in person at a local office are your only 2 options now. None of these 3 changes came with a personal letter or a phone call from the SSA. They changed the rules and moved on. Now you know exactly what changed and exactly what to do about it. Subscribe, share this with someone you know who is on Social Security or Medicare, and I'll see you in the next one.